Low VA Rates Nation, it is Eric. It is another wonderful Friday, and I'm happy that you're with us. I'm going to invite people to start thinking about questions now, because I don't know, maybe it's me, maybe I got to get a different spokesperson, but the last few weeks we've had a bunch of crickets when it comes to questions. So start thinking about questions that you might have regarding FHA, USDA, VA, or conventional loans. And I'm not going to talk a whole lot about VA loans today because we do that every week here at Low VA Rates. So we were thinking, what are some topics that we can start talking about that maybe we haven't focused enough energy or time on? And it came to our minds that, look, a lot of you probably think all we do are VA loans. Why? Because our name is Low VA Rates. And 99.999 with a bunch of nines % of what we talk about here is in regards to veterans, the military, and obviously VA home loans and VA mortgages. So here's a little secret. We do all loan types. We are FHA experts, USDA experts, conventional experts. Now, I don't want to just throw the word expert out there and have people think, well, how can you be great at everything? I'll tell you, Low VA Rates has been in business. Well, as an organization, we've been in business for the last 5 years, since 2003. But I myself, the president of the company, I started doing mortgages back in the year 2000. So there's about 18 years of experience just with me. But I am surrounded here at Low VA Rates by people with much more information, with much more experience and much more expertise than I have on all of these. So let's just quickly outline other loan types. If you are a civilian and you follow Low VA Rates online here because you love all things American and patriotic, great, I'm a civilian. If you follow us because you're a veteran, you have a VA loan, that's also awesome. But all of us have friends and family members that also need mortgage help, whether they're buying a home or refinancing. And we want you to know from here forward that you can send all of your friends and family our way for the same sort of service that you have become accustomed to at Low VA Rates. So, FHA. What is FHA? FHA stands for Federal Housing Administration. Okay, it's similar to a VA loan. It is also a government loan. Okay, in the industry we refer to FHA loan as a government loan. It allows for almost no money down, okay? It's not 100% no money down, but you only have to put 3.5% down, and there are even ways to use an FHA loan here at Low VA Rates with some down payment assistance programs, so you don't have to put any money down. But on FHA, it's 3.5% down on average. Okay, FHA loans have looser underwriting guidelines, and they're generally easier to qualify for than your conventional loan. Now, what's USDA? Hey, it's almost the weekend, it's Friday. Don't get this confused with the steaks that you're going to go grill this weekend. It does stand for U.S. Department of Agriculture, but we're not talking about beef or cattle here. We're talking about the USDA mortgage. It's also a government loan, okay? And it is for rural areas. Now, here's the key. A lot of people think, so unless I'm going to go buy a farm or I'm going to go way out into Timbuktu, what good is a USDA loan? Believe it or not, if you go to USDA's website, there are hundreds of thousands of places throughout the United States where you can qualify for USDA loan. It is not rural in the sense that it's for farm or farmland only. Okay, that may be what it started out as, but there are areas right here within 20 or 30 miles of the metropolis of Salt Lake City, Utah, or Orem, Utah, where you can get USDA loans. So pretty much every state, if I'm not mistaken, has USDA approved areas. It is 100% financing, which means no money down. Okay? So, just like on a VA loan, you don't have to put any money down when you're buying a house with a USDA mortgage. It does have monthly mortgage insurance. It's small, but it does have monthly mortgage insurance. We all know here at Low VA Rates that we love the VA loan. It is government, okay? Writing's not that great today. It is 100%, so there's no money down, zero money down, and it has no mortgage insurance. So that's why we love the VA loan. And veterans, of course, should get something that nobody else in this country gets. They're willing to put their life on the line and die for this country. That is why the VA loan, in our opinion, is so much better than these other loans. But the other loans are still great. And then there's the conventional loan that most of us know about. We hear Fannie Mae, right? Fannie, Freddie. These are those conventional loans that are readily available in the United States. Most of the time, people just assume that they have to put 20% down. Okay? That's not the case. Did you know that there are conventional loans with as little as 5% down and sometimes even less than that? People also assume that on a conventional loan, they have to pay mortgage insurance. There are conventional loans without mortgage insurance, even if you're not putting 20% down. So maybe as we go forward, and again, questions if you have them, as we go forward, perhaps we'll spend one Friday where we just talk about FHA, one Friday where we just talk about USDA, and one Friday where we just talk about conventional. So do we have any questions yet?
What kind of loan would be best for a first-time home buyer?
What kind of loan would be best for a first-time home buyer? Depending on there's other variables other than the fact that you're a first-time home buyer that should be taken into consideration. But normally when we're thinking about first-time home buyers, we're thinking about these three government loans in general. Okay? Not always, but if you're a military, if you're a veteran, for sure the VA. If you're going to be going somewhere more rural and you'd like to keep as much money in your wallet as possible with very little money down, I'd say go USDA. Okay? If you're not a military homeowner or in a rural area and you don't have a lot of money to put down, you might go FHA, or if you've got less than desirable credit. This is one that we look at a lot. But give us a call, chat with us online. If we get a little bit more information, whoever asked that question about your particular situation, we can customize kind of a suggestion for you. Any other questions?
Does credit score, how does that affect your loan?
Good question. So credit score affects every single loan out there. Now you may say, wait a second, this sounds new. On VA, as we've mentioned, here at low VA rates, we do not have a minimum credit score that we require. But it still affects all loans in the sense that the lower your FICO score, the more impact it could have on your interest rate. So if I had two people, let's say they were identical twins, Joe and John, and both Joe and John came to me for a loan, and one had an 800 credit score, and one had a 500 credit score, they might both get an FHA loan, for example, but this guy here would get a better interest rate than this guy over here. So every single loan will be affected by your credit score. Now, as far as minimum credit scores, that's another one that's very hard to just put out there black and white, because in today's technological world, there are situations where you might get approved on an FHA loan or a conventional loan with a credit score down at 600. Yet, if it's not an automatic approval on the computer through some technology, most of the time you're going to want to see probably a 620 on conventionals, and on FHA, I'm not absolutely 100% certain if FHA has a strict guideline on FICO scores, but great question. If you come back to our video within the next 30 minutes, somebody on our FHA team will let you know what that minimum FICO score happens to be for FHA, USDA, and conventional. VA has no minimum score. Any other questions?
Yes, and then Justin Garrison asked, what if you wanted to buy a house in a different state?
Oh, great question, Justin. So FHA, well, every single one of these loans will let you buy a home in a state other than where you're living now under certain circumstances. So I want to make sure I answer your question broadly and then I get more specific. For example, USDA, VA, and FHA all require, if you use one of these three loan programs, that you're going to live in the home. So, for example, I'm in Utah today. I want to move to California. I can use any of those three loans if my intention is to move into that house. Now, if you're talking about an investment property or a second home, a vacation home of some sort where you're not going to live full time, you're either going to rent it or you're going to use it just seasonally throughout the year, then this is going to be your best option, the conventional loan. Okay, conventional loan can be used for investment properties and vacation homes. These loans cannot. Other questions?
Nope, that's it.
Okay, and I do need to make one slight change to my last answer. FHA for sure will allow a co-signer. For example, we see a lot of times a first-time home buyer, maybe right out of college, it's someone that got a job, but they don't have quite the credit history or enough income on their own right out of school to go buy a house. They might get mom or dad to co-sign on that home for them. Mom and dad aren't going to live in the house, but the person that just graduated from college is. So when I say you have to intend to use the property as your primary residence, the occupant on an FHA loan must intend to occupy the property, but you can utilize a co-signer on an FHA loan. So I think it was Justin that asked that question. There's some variables there. So hey, I don't know if this was just a topic that interests more of our followers, or if we happen to invite you to ask questions at the beginning, but I appreciate it. 3 questions. Certainly know that someone out there is watching. Hopefully you guys got a lot out of this today, and we'll see you next week at the same time.